Oh man, I guess I could take a nap again because Bitcoin isn't doing anything. All of the moves over the weekend were pretty much negated, and Bitcoin moved in a sideways fashion for the majority of the weekend. So starting off right after that little Friday movement, we got a lot of sideways action, and this is currently what we're still sitting in. Bitcoin essentially at an even pace here. So what are we expecting coming up this week? We're going to give you tons of insight. We also think that there's a lot to do with the FOMC, which is why price is moving sideways here. So expecting a breakout one way or the other, after this happens. And we are starting to get some bullish vibes here on the commitment of traders on Bitcoin futures charts. So we're going to take a look at all of this during the course of this video. By the way, we're almost done with our tutorial, so that's coming very soon, and that's a 5-part series, guys. We really went in depth from everything from trading psychology to how to build a portfolio to, positions for scalps, positions for swings. It doesn't really matter what you're doing in the market. We have some things to show you guys in that tutorial. All right, so let's go ahead and dive right into it. And if you don't know who I am, it's your boy Maestro. Welcome to The Long and Short. Let's go. Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a short-term or a long-term trader, we got some tricks up our sleeve to show you guys today. Thank you for tuning in. Hopefully you find this time valuable, and if you do, go ahead and hit that like and subscribe button. Let's go ahead and dive right in. So, couple of things that we're watching in the market right now. There are some factors that are coming up this week, which is giving me vibes that, is going to make the market move sideways until these events actually happen. So first one is the FOMC. All right. Ultimately, we know that Jerome Powell is going to come out this week and potentially raise the Fed rates. How much he's going to raise them, anyone's guess, but that is happening this week between the 15th and the 16th. Today is the 14th. All right. So today is the low. Market is pretty boring right now. There's a Russia-Ukraine war still going on right now. That's creating uncertainty in the market. And the markets are kind of just jumbled up right now. There's a lot of different activity happening in sectors that don't necessarily seem correlated. And people are a bit confused on which way the market's going to move. So Bitcoin itself really just swung sideways over the weekend, right? Friday, we had a little bit of action, but it swung sideways over the weekend and really didn't do very much since then. All right. We tried to take a couple of shorts today, so we'll give you the outlook on those plays. They didn't turn out very well, but we didn't lose anything. Just based on the way that we trade, we like to protect ourselves no matter what, right? So once the trade moves in our direction, we're able to lock that trade in for a win no matter what, or either break even, right? Or take a very small loss. This is the way that we trade the market. So we'll give you the insights on that. But basically, there really isn't any opportunity. There hasn't been very much opportunity in the market over the past 3 days when it comes to trading. All right. And things as far as people who are holding, we're just sitting in the same range that we've been sitting in all weekend. So no activity, no excitement, right? So the crypto market is fairly boring when it comes down to it. But our outlook is we're expecting things to turn a bit bullish after the FOMC. Now, how bullish is going to be the question, but that really depends on whether or not the FOMC is going to raise those rates and the market reaction after that. So when we think about it, right, if we take a look at deeper levels of charts and what the larger speculators are doing on commitment of traders, they're actually going long. And we're going to show you guys that on the Bitcoin futures chart. Smaller speculators are starting to think short. And I told you guys, this is the perfect storm for price to explode to a new level, right? Once you get the retail crowd sort of bored and disgusted with the market, if it's not moving, that's essentially what will happen over time. That's the perfect time for the larger speculators to start to buy, right? And then all of a sudden, everybody will wake up again, right? Another thing that gives me bullish vibes is that we're closer to a bottom in price than we are at a top, right? And usually in price action, right? And you can see this a lot on your charts. Price needs to hit a low, dip, grab liquidity to the downside before it's really able to make a sustained move to the upside. So we're expecting price to take another dip here eventually before we take the trip to the upside. All right, so that's something that we're going to be watching in the market. That's why shorts are still viable at this point. You're sitting right in the middle of this range if you really look at it, okay? And shorts are viable from the middle of the range, just like longs are viable from the middle of the range, which is why a lot of traders are getting liquidated because they don't know which side of the market to really trade. It seems like no matter which way you go in, your moves are very tight, very small, and they're very short in length when it comes to you making any real profit in this market. You're making 2%, 3%, 4% on the trade, and that's it, right? Unless you're catching some of these more extended moves, but they come rarely, and you have to be in position to catch those moves as well. All right, the market is tightly consolidated right now. All right, this is usually when the market finds a way to break out. So after the FOMC, it's just a couple of days away before we get the real news on what the rates are going to be. I anticipate that we're going to break one direction or the other after that, okay, not before. Now, you may see some volatility in the morning before the announcement comes out, and be careful around that. You don't want to necessarily trade that, and the reason why is because if you do and you get caught on the wrong side of the market, it could sprint against your position. So we're going to sit on our hands a bit until we get more word or more certainty on what the Fed is going to do. All right? So that's our outlook. Let's take a look at a couple of these trades that we took here because we were thinking short today just based on the activity that we saw in the morning. So let's scroll this in and scale this into the proper perspective. We're going to look at the 15-minute chart here. All right. Now, unfortunately, they got rid of my arrows. So let's try to bring them back. All right. So we'll look at it on the 10-minute chart. How about that? Okay. So very short plays, right? Very short plays. Now we're anticipating that price is going to sort of try to find the top of a range, bottom of a range. And if you're looking at a 10-minute chart, you have to scroll this out a bit to get the real perspective on where the tops and bottoms of these ranges are. So all weekend, we were just pretty much swinging to the side. We took a dip, came right back up, swung to the side again. So we're right in this range here. Now what we're trying to catch, right, is when the market's going to break out of this range. And the easiest way to catch it is when the market either hits the top part of this range to go short, which is what we tried today. We just kind of got stopped out a couple of times. And when it hits the bottom of this range, either here or here, we're looking to go long, okay? So these are the plays that we're trying to line up. And you can see you have confluence with a number of different levels getting hit to build up, the idea that we can go long from here and short from here, okay? If price is showing this to us, then we will take attempts when price moves in that direction, because we think that there are people protecting this level, just like there's people protecting this level, which is why we're stuck sort of in this range here, okay? Now, this is only until the FOMC. After the FOMC, these ranges, in my opinion, are not as valid because price is going to try to break out one way or the other. So the small range that we're trading in today, it takes very small moves, right? And that's pretty much all you're going to get in the market, as we explained before. So if we pull up our trading account history, as you guys can see, we didn't take any losses here, right? We won 9 and broke even on the other trade. And if we pull up everything here, let's just pull this screen back down, right? You can see it was very short moves. Essentially one candle wick, right? It was about 5 minutes. I was in and out. Second one here started to move in my favor, but this movement up came and caught our stop loss, which was placed in front of the short position. So when you start to get reactions like this in the market and nothing's really moving in your favor, it's okay to sit on your hands if you understand that there's a greater, theme at play here when it comes to things. And if you see things moving sideways, it's almost best to sit on your hands. So we may take a couple of other shots, right? We're not making very much progress in regards to this trading account, but we're not losing anything. So it's about holding these positions. So as we start to take more shots, as the volatility picks up, these wins, will be, greater amounts. But right now we're kind of just trapped in this small range here and not much is happening in the market. So let's go ahead and take a look at a couple of things here. We want to look at Bitcoin futures because Bitcoin futures may give us some insight into what's going to happen over the course of the next couple of months. Now, we noticed that the larger speculators were creeping over that zero line last week. We mentioned this, right? And now they are pushing a bit higher on that zero line. So you can see the smaller speculators are starting to think short. The larger speculators are definitely increasing their positions long, and the commercials are actually increasing their positions long because now they're serving up for some of these short positions that the retail traders are taking. People are thinking differently, okay? And if you're thinking differently at this point, This is the perfect storm for the larger speculators, okay? This is where they want you to be in the market. So you can see the open interest picked up. That open interest was to go long. We can see it here between these two correlated charts, all right? Now it's sort of evened off a bit, so I want to see if they stay above this zero line. If they do, then after the FOMC, we can start to expect things to turn a bit bullish. You may get a bit of a dump first, right? But all within the ranges that we're trading in, and then you'll start to run a bit, all right? Which is essentially the most unexpected outcome of what people are thinking when it comes to the FOMC. There's a lot of different factors in the market, right? But right now, what we're paying attention to is the larger speculators, the way that they're moving on these charts in relation to the smaller speculators and the commercials, right? Also, the bears have power in the market, right? So this is another reason why we were sort of thinking short today. The bears do have some power still in the market, but they may start to relinquish this to the bulls after the FOMC. So let's wait and see how this goes. All right, and when it comes down to your money flow, there is more money coming into the market today than there was on Friday. Okay, so this is starting to give us some bullish vibes when it comes to the Bitcoin charts. All right, and even if we take a look at some of these heat maps here, right? So this is Trading Light. This is another website that I use to get a gauge on Bitcoin price. The majority of your pressure is on the bottom side, right? So where are your really protected levels? You have one sitting here at 36. We can call that 37,000, okay? You have another fairly strong one sitting here at around 37,492. We'll call that 37.5, okay? So there's a lot of pressure on the downside to push this price back up. Your next really white hot level with 556 Bitcoin waiting to get bought is right here at 36,000, okay? So if we zoom this out some, guys, we can start to see, even though there's pressure at the top, you're closer to the bottom, as we explained before. Once you start to break to the 42, right, 42.5, these levels up here are of some concern. But for the most part, you do have solid levels of support all the way down when it comes to Bitcoin price. All right, you have one level here, which is at 37,000, that's 268 Bitcoin. Next level down, 36,000 is around 556 Bitcoin. Next level down, 366 Bitcoin sitting at 35,050. Okay, next level down, 198 Bitcoin sitting at 34,050. Next level down is 429 Bitcoin sitting at 33,000. Next level down, 32,232 Bitcoin. Next level down, 221 Bitcoin at 31,050. All right, and if we go to the upside, your first real major level of resistance, you do have a bit of one forming now, right at around 39.2. Next level up is around 40,050 with 165, 181, which is sitting at 42,000, and at 42,550, you have 231. Right? So you can see we're stuck in this range here, but your bigger bounces will come from the bottom. And I'm thinking around 36.50, 36,050 is where you're going to start to get some of your major pushes up, right? Because that essentially would show us here that you're breaking all of this liquidity to the downside. You may crack through this level, gain more steam, turn around here, all right? So this is another way that heat maps can be useful, you know, when it comes to looking at Bitcoin price and seeing how levels are strengthened over time, or how they've sort of just been sitting here waiting for price to come down to them. These are the institutions, guys. These are the only ones with the buying power to take Bitcoin to these limit order levels, right? And have it just sitting there waiting for price to come down to it. So we're thinking that we're going to go short before we go long after FOMC. That's ultimately our story here. Now, if we start to break down and really start to take out those levels to the downside, you know, let's go back here. If we start to really take out these levels to the downside, then that's a bit concerning, okay? But in all reality, guys, I don't think that we'll be able to really push price down to the sub 30K level just based on all of this support that you have here, sort of at incremental levels at, you know, 37.5 and 36.50 and, you know, 35,000. Each level down, you're going to hit walls, okay? So let's hope that these walls stand up. Let's hope that Bitcoin's able to support itself here. If not, then, you know, for us to get all the way down to 30K, there's going to have to be a ton of selling. And how much selling has already occurred to get us down to these levels, right? Already a lot, all right? So lots to look at when it comes to the charts. Let's take a look at some daily charts, see what's happening there. All right, let's go to the total crypto market cap, scroll this out to the daily. And as you guys can see, we're right on our blue lines here when it comes to FOMC. So we had a number of different hypotheses, right? When it came down to this, we said that price could go up, kind of swing around, but we wanted to see it in more of a strong position going into the FOMC. Right now, we're in a fairly weak position in the crypto market. The market cap right now, 1.693 trillion. All right. You know, we like to see it above 1.876. Is this something to worry about? Not necessarily, because we're trading near the bottom of these ranges here in price. So if price were to really dip here, right, we're not necessarily thinking that we're going to crash below these levels. As you can see, these are supported levels, even in market cap. All right, so we like to relate what market cap does a lot to Bitcoin, and these charts look pretty much the same, right? Because Bitcoin has around 42% of the market cap at this point. But what we're looking at here is whether or not we're going to break above this after the FOMC. So it's sort of just swinging sideways going into the FOMC, which is ultimately the hypothesis that we thought would probably happen since January. Okay, we've been calling the range since January. Okay, top, bottom established. You know, and at this point, we're going right into the FOMC, pretty much in the center of that range. Okay, let's take a look at a few coins here. Taking a look at Bitcoin on the daily. We're back into a discounted zone, and we will be dropping the tutorials to give you guys the layout on how we draw all of this stuff up. That's actually in progress right now. We're doing the editing right now for it, so you can expect to see those either, you know, by later tonight, they'll start to drop, or by tomorrow, the latest. All right. But for the most part, Bitcoin swinging in the range here between scale in and scale out positions. And we're expecting Bitcoin to kind of play this middle piece right here of this range, just like the market cap is going into FOMC. If we do experience a dip, we're not expecting to dip too much further below where our current levels are for scale in and scale out. Okay. So if in fact these levels do get hit again on some sort of dramatic drop, we're ready to buy at these levels for a push higher. Okay. When it comes down to Ethereum, pretty much the same result. You're sitting right here in between the low premium and discount zone. Okay. So we're anticipating that if Bitcoin drops, then Ethereum will drop as well. But it's coming right up to that level that we want to buy it at, somewhere around $2,400. Okay. But right now, anywhere in this discount zone is a good buy for us when it comes to Ethereum. And we're expecting that this will also sort of launch out of this position after we start to get more clarity in the market. Whether or not that comes after the FOMC is anybody's guess. But this is what we're thinking. Just based on how aggressive the larger speculators have become, this gives us bullish vibes in the market. All right, so this is what we're anticipating. Sort of a dip down, push higher for us to start to try to find higher levels of this range and maybe even potentially break out of it. Okay, so that's what we're looking at for ETH. Let's go ahead and take a look at Terra Luna. Terra Luna has been showing us a lot of strength in the market, and it seems to be getting supported here at the high premium level, right? So if you were fortunate enough on January 30th is around the area in time where we started to draw these lines out for scale in and scale out. If you were fortunate enough to catch it either in a discounted zone or this scale in zone, right now you're in pretty good profit. This was a move of approximately, let's just do a roundabout, approximately 100+% is what you would have caught from a discount to a high premium zone. Okay, so you know, again, these charts, they look a little weird because we're zoomed in on the daily, but these moves right here are substantial moves from discount to low premium zone. All right, guys, even from the top of a discount zone to a low premium zone, you're still making what? Let's say 12 to 14% in just this small of an area. Okay, so that's why these areas are viable. And you may sit in a bit of a drawdown when it comes to your discount buying in these areas, right? Which is why we like to sort of pinpoint where we want to get in. But understand where you're getting in at is based on historical price movements and levels that are created by price. We're getting in at the most opportune time in the most opportune area when you're buying in a discount versus the premium zones. All right. The people who buy up here, they're the ones who get wrecked. All right. So our tutorial is going to cover all of these sections, how to build them up, how to line this up on your charts for yourself so that you actually can do this on your own and take a look at things on your own time and leisure, right? Taking a look at Avax, which is another one that was sort of pumping a bit and starting to see some depressed price action now. Okay, so we're in this discounted zone for Avax. This is one that we're watching as well. We think that good scale in buy levels are going to be somewhere around $60, $45 for Avax. All right, looking at Atom, it's another one that we've been watching intently. And as you can see, the scale in and scale out zones do get hit. Discount to low premium zones do get honored. right? And now we're coming back into a discounted zone. I'm anticipating that we're going to drop a little bit, guys, before we really see any real rises in price. And this is natural price action, right? If it happens this way, then this is what we do want to see. So just being prepared for that is going to allow you to kind of just take that drop, you know, experience it in the market, move on from it. Once you start to see prices rise, you'll understand what it's all about and why it has to happen. Now, where are the levels that, you know, price likes to grab? Equal lows or imbalance areas. We've called this out many different times on these channels. And ultimately, we're expecting that price may go down and try to test some of these lows for a number of different cryptos, right? Because a lot of them look the same, right? They're all creating lows. So you have one here, you're here, and price is trading near those lows. You saw it on Bitcoin, you saw it on Ethereum, right? The only one that's the abnormal crypto right now is, you know, Luna. Luna's not trading near the lows, but everything else for the most part is, right? These lows here, price is trading near them. This is Chainlink, all right? XRP, same thing. You're trading near the lows created in price, okay? Lows here, you're trading near them, all right? In this discounted area, sort of swiping in between these discounted zones. All right, so being that all of crypto is pretty much in the same place, we can expect the same results. All right, when crypto is pumping on very bullish days, all of it's going to pump. When crypto's dropping on very bearish days, all of it's going to drop. But if you look at the market here, and this is why we like to set up watch lists, right? The market's pretty much mixed today. It's mixed emotions going into the FOMC. So let the market be mixed. Don't be anxious to trade. Don't be afraid to sit on your hands, right? And just let the market do what it do over the course of the next couple of days. Let it correct itself and then get in, because these are the major moves that are going to happen after everyone gets shaken out. All right. If we look at Solana, same exact thing. Lows are created, price is trading near the lows. All right. You're almost at a bargain zone when it comes to Solana. So Solana at 67 bucks. I mean, that's a pretty good deal if you ask us. And we're in a pretty deep area of the discount zone at 80 bucks, right? We said Solana at 88 was a bargain still for us, right? So even if getting in at these scale in zones, you know, you may be down a bit in the trade, but if this is a long-term hodl, your entire goal is just to see it creep up into this low premium zone, all right? And once you're able to achieve that, once Solana does break above $133 again, which I'm pretty sure it will, then this is where your selling opportunities are going to come in, all right? Every trader sits through drawdown. Whether or not you have the ability and the emotional fortitude to sit through that drawdown is what really matters when it comes down to trading, right? It's always the people that panic sell that's the ones that's kicking themselves later on down the road. Let's take a look at Polkadot. Again, lows created, price is trading right near those lows. Centered to the ranges that they've been making all year. CRV, same thing. Lows created, you're below the lows at this point, right? You're in a bargain zone for CRV, right? And this is one that we know can just launch out of this area. So these are very good buys when it comes down to it for CRV, right? Don't let the charts fool you. This downwards action has happened before, guys, okay? It has happened before. And once price does find the bottoms, once price does reach areas where it has launched from before, these are where your bigger institutional big money players, venture capitalists are buying things. So don't be afraid to let price drop back down to these areas for them to get bought up again. All right, let's take a look at Engine token. You know, pretty much the same thing. Lows created, price trading near the lows. All right, so when price is trading near lows, we're expecting for those lows to get tested or at least touched, if not broken, before price has enough steam and real push to go higher, sort of to new all-time high levels, or at least trade back to low premium zones for a lot of these coins. You're going to need to grab that steam from the bottom side, all right? And that's what we're expecting in price. So according to us, right, FOMC is definitely going to be a telltale sign of what's going to happen with the rest of the market over the next few days and weeks. And we're just sitting on our hands, just waiting for that to happen. If in fact we do try to take another position today, let's go back to our 15-minute chart and see if there's really anything aligning here for us to take advantage of. You know, I mean, you see what we're saying though, guys? Like, the price is going to go short. It's just about when you're getting in and whether or not you're able to stay in that trade. So sometimes moving our stop loss up, you know, it does take us out prematurely before we get larger drops in price. You know, so that's just the, you know, the ebbs and flows of trading. What you want to do is sort of place your stop loss after price does make a move. so that you don't get caught in these type of positions here where it just comes back on you and then continues to move. All right, so we learned a lesson today. We didn't take any losses, but we did learn a lesson today. Don't put that stop loss in, so fast. Let price move around a little bit, especially if you have conviction in which way the price is going to go. Now, this may be the bottom of where price wants to move today, right? We don't necessarily know that yet because you are starting to get some bounces up from these levels. You can tell by these wicks. So we'll see what happens, right? But for the most part, guys, we'll be sitting on our hands until we see some real opportunity when it comes to price action movement. All right, and then we'll take a trade. Again, not very many. We only have one loss on our account in regards to this trading challenge, which we've been live with for a few weeks now. And ultimately, I think that we're doing okay, but we do want to add a lot more to this account. These small wins are a bit annoying. But other than that, guys, if you don't know who I am, it's your boy Maestro. Thanks for tuning in to The Long and Short. If you learned something today, please go ahead, hit that like, subscribe, share button, notification. We will be diving deeper into price as time goes on. But right now, the market's pretty sideways, guys. Not a lot to show you, okay? As always, all of our theses pretty much get hit. You can look imbalance, filled. Imbalance created, filled. Imbalance created, filled, right? We show you guys this stuff every single day, and these are the things that we're looking for in price, okay? So we'll continue moving forward here. Be on the lookout for those tutorials. They will be coming soon, and that's it for me. It's your boy Maestro. We up out of here. Thanks for watching The Long and Short. Peace.